Welcome back, Alpha Hunters. Hopefully you did have a great week. Next week will be a little bit short week, right? We do have Thanksgiving here in the US. So Thursday, there will be no trading day, and I believe Friday will be a half day. So Monday through Wednesday will be normal. So just know we're going to have a little bit different week next week, all right? So let's just run through what went on this week. Nice little gap down to start the week. Nice little rip there into the middle part of the day. And then we just kind of went sideways right around the neutral line there on Monday from Friday. Ended a little bit negative, nothing crazy. And then we got the CPI Tuesday morning, and the market absolutely ripped it higher. Nice gap up there on Tuesday. Traded higher for really about the first hour and a half. Then we had a nice little pullback, and then kind of a little shakeout and pushed higher back up to the daily highs. A little bit of a pull down there at the end of the day. And CPI did come in at 3.2%. The market was expecting 3.3%. So that was one reason why we did gap up. Core inflation actually did come in at 4%. The market was expecting, and the prior month was also 4.1%. So yeah, I mean, I don't know what the market was so bullish for on Tuesday, but it was a nice gap up there, continuation. But I mean, did we not know that inflation has been trending down really over the past year and a half? Well, I guess I don't know. I guess it hasn't been, because apparently the market didn't realize it has been. But yep, you know what? Tuesday ripped it higher, and that was basically it, though. That was basically it. Nice little gap up there on Wednesday. Nothing crazy. Nice little trade higher. Then we kind of just had a pullback there, even into early Thursday, and then we kind of bounced. Then Thursday into the close. Friday kind of continued it, a little bit of a pullback, kind of continued higher, but we didn't really do much the rest of the week after Tuesday. So yeah, all the fireworks were shot on Tuesday, and that was already coming on the back of the previous 2 weeks where we had seen strong bullish action. So that's 3 weeks of very strong bullishness here on the market. All right, take a look here at sector rotation for the week. And we can see real estate, definitely the week's best outperformer. They really crushed it there on Tuesday. Materials, discretionaries, utilities, financials, industrials, all outperforming. Communications coming in line with the market. Tech underperforming there for the week. Healthcare, energies underperforming. And staples, the week's underperformer. You can see energies really kind of dropped off there Thursday and then snapped back on Friday. If you want to take a look at that, go look at crude and go look at gasoline. Those things dropped off there pretty good on Thursday and came back pretty good there on Friday. All right, taking a look here at the VIX. VIX just kind of steadily came back down, got under 14, held under it for the close there on Friday. Taking a look here at the DXY, the dollar index. And, last week I was a little bit cautious because it seemed like we should have rolled over already, but early in the week, we started to come back down after a little bit of a higher retest there. I was definitely liking the bearishness on that zone on the DXY, and then Tuesday comes and we got obliterated here on the dollar. Wednesday, Thursday, nice little sideways action. Friday, continuation down. Now, maybe dollar has topped, maybe dollar's going to go back down. But we did have, pretty good run here for about 2.5 months running here into early October. So, you know what? Does it set up maybe, a little bit of a consolidation? Maybe it starts to push higher later on. Yeah, we'll see. We did take out some previous highs over the past 12 months on that move. So it'd be interesting to see how this sets up. If it just starts wind up dropping off, that would be interesting to see that happen. I don't expect that to happen, but we'll just have to see how it sets up. All right, taking a look at the GLD, the Gold Trust. Nice bullish pop that we got this week, especially after the CPI. Dollar dropped off. So Tuesday was pretty strong. Thursday was kind of strong, even though dollar wasn't exactly dropping off all that much. But, gold doing pretty good there on Thursday. Be kind of interesting. I would still expect to see this probably come back down one more time. Maybe it doesn't. Maybe that was the pullback. I was kind of like to have seen a little bit deeper, but you know what? If you're buying the dip, it makes sense. It was a very strong move that we did have back in October, but I think we'll probably see a little bit more of a pullback eventually. 10-year yield. Well, 10-year yield, obviously, like the dollar, dropped off pretty good there on Tuesday, but unlike the beginning of November, it did not have multiple days of just breakdown. right? Back on November 1st, 2nd, and 3rd, just multiple days of breakdown. We didn't really have that this week, even though people were talking like, oh my gosh, look at all the inflation dropping and yields dropping. But it wasn't like it was just a monster drop off here. So I'm going to talk about something else on yields coming up. But if this was the breakout and we were just retesting here, like we've been pulling back here over the past few weeks here, but we just kind of pull into maybe this 4.2 to 4.3 kind of area, the previous high that we had last year in October, November, and then we find our footing here on the yields, and then we start to push higher. That'd be interesting setup, to kind of see that. But it's not like we're just dropping off here. That was just a very sharp move that we had to start the month of November, and it wasn't like we just continued to break down very solidly this week. So be curious to see how this kind of plays out going forward, and I'm going to talk about yields a little bit later on. The 10 and 2 inversion yield, well, it's not chaos yet. That drop that we got back in the beginning of November, it's definitely cooled this for now. Definitely could get going later on. I think for now it's not a big deal. I'll probably continue to watch it, but don't worry about it too much right now. The HYG, the high yield corporate bonds, well, yields dropped pretty good there on Tuesday, so bonds did pretty well there on Tuesday. So yeah, you can see this very rapid pop that we got from the CPI on Tuesday, and I don't really know. It's coming back into a very strong sideways time period for that it put in for most of the year. It'd be kind of curious to see how things kind of go here. I think yields will push back higher, which will put issues on bonds, but we'll see kind of how that goes. LQD, the investment grade side of bonds. What's very interesting about this spot here on the LQD is this was the support level that was holding up bonds before this waterfall. Okay, so if we just retested, came all the way up to this support and resistance level now, do we see a bit of a pullback? This is just not a really good spot to be bullish on bonds. There's also a lot of reports this week that market investors have never been this bullish on bonds, or at least not in the past 20 years or something like that. This is a very bad time to be bullish on bonds, okay? Just right here. So whenever you see reports like that, like just anything of like market participants have never been this bullish or bearish, it doesn't even matter what comes after, whatever headline or whatever statement. Typically you want to go the other way of whatever asset that headline is talking about. So we'll see what goes on here with the LQD, but it, just right here, not exactly the best spot to be, not a bullish. Okay, so just be patient. And the TLT, the 20-year Treasury bond, well, I mean, it's bounced pretty good, especially here in the month of November, but it's not doing as well here this week like you just saw with the HYG and the LQD. So I mean, it hasn't even gotten back down to this low around 92. You can definitely tell that was a pretty good support level, that once it broke through, it kind of just waterfalled off. So I would just be a little bit cautious here. We got like a little rising wedge action kind of going on here, and it might be one that maybe we see some bearishness kind of come in to the bonds area early this next week. Okay, I'm going to give you, and why might we see bearishness on bonds or yields increasing this next week? Because we are going to have Treasury auctions on Monday. We are going to have the 20-year bond here auction November 20th. These are usually midday. They're about an hour before I get on the live stream. So I guess about 1 o'clock Eastern, I believe. So if you see some volatility midday start to pick up, definitely watch the stock market and watch yields. If yields start to really push up there midday, it might be because of this 20-year Treasury, because I'm going to go back to the S&P. So here's a 15-minute chart of the S&P 500. I'm just looking at last Thursday, November 9th. We had a 20-year Treasury auction, and you saw the volatility. We saw volatility at that time, and we actually ended kind of bearish as we went into the end of the day. So if that happens again, that might be the catalyst that pushes yields back higher. And will the stock market like that? Most likely not. And for how overextended we are here over the past 3 weeks, where everybody got in Everybody closed bearish positions. There was a massive short squeeze. Could we see the stock market drop off rather rapidly? Yeah, I mean, possibly. I mean, would it continue over multiple days? Probably not, because there's going to be dip buyers. We'll just have to see how that goes. Now, looking here at week over week, options change. A lot of put buying out here, December 15th, but not really any net selling going on here for the week. Just nice put and some call buying there for December 15th. A lot of puts though, a lot of puts. All right, taking a look here at the RSP, very nice move. And what I'm going to say about a lot of these different ETFs that track a lot of these different major indices or whatever, they are rather extended. The other thing is they are coming into some pretty good support and resistance areas, that they've broken down before. So maybe not the best spot to probably be long, not a bad spot to be looking to be bearish either. So the RSP obviously coming into this 146 level that has been pretty good support and resistance spot before. The DIA, the Dow Jones Industrial Average, yep, nice little support and resistance spot right here around 350. Pretty extended, has some pretty large gaps. You know what? Not a bad spot. Maybe to look to be bearish. IWM as well. Now, the one thing I will say about the IWM, I actually think IWM is going to be the better place, better spot to invest going forward over the Qs. I do not think big tech is going to be all that, especially in the AI craze. I'm going to have a video come out about that later on, but I definitely don't think you want to be bullish here, especially with this large wick that we kind of threw in this week. Maybe we push a little bit higher, but I think there's probably some downside to come. Speaking of the Qs got very, very close to taking out this high back from July. Very, very close. I mean, look at that. And then it just died. I mean, it gapped up almost to that level, almost took it out, but it just died off. Just didn't do much throughout the week. So yeah, very, very interesting there. You see that on the gap up, got really close, even made a midday push, but couldn't even quite get there. Just came back down, just hugely sideways there after that gap up there on Tuesday. So very interesting spot here on the Qs. I don't want to be bullish on the Qs. I don't want to be bearish on it, but I mean, I could understand maybe taking a shot. I could. So what's interesting though on the Qs compared to the SPY is we actually had a little bit of a switch. Now we had one a couple, like last week, I believe, where we had a lower high come in on the Qs. And if we look at the SPY, we actually had a higher high Wednesday to Friday here. So I'm going to go back to the intraday, and we actually had this high that we had back over here, 451.37. This one was at 451.42. So slightly higher high here Wednesday to Friday there on the SPY, and the Qs. Well, you can see that they did not have a higher high. They actually had lower highs. So very interesting little look there on the Qs, especially compared to the SPY. So, I mean, what does that kind of mean for the Qs and SPY? I mean, I don't really know. I don't really like how extended we got. This very much seems like a short squeeze. So that's just kind of my take on it. I think the market probably shot everything it could over the past 3 weeks at the massive amount of short interest that we had out there in the market. And then, the data, started with the Fed back on Wednesday, November 1st. It started with that. And we got the follow through for the previous couple of days. And then last week and this week, with CPI. So it seems like the market got everything it wanted and it ripped it. But I mean, were people buying or were people short covering? Well, that kind of remains to be seen, because I don't think there's any valid reason for the market to actually be up as much as it was on Tuesday following CPI and inflation that was coming down, that we already knew inflation's kind of trending down. So it's kind of where I look at that. SPY also kind of coming into a pretty good resistance area as well. Yeah, we did have that slightly higher high Wednesday to Friday, and we do have quite a bit of gaps kind of lower. Now, what's interesting, if you do want to look at your MACD stochastics, is we do have rather strong high oscillator or stochastic kind of position, much into the overbought areas. So Qs massively overbought. This is hugely extended, And if you compare it to the peak that we did put in back in July, well, we do have a divergence there. So yeah, we are rather extended on most of these into that overbought area. Pretty much all of them have this overbought condition on the stochastic. So, is it justified? I don't know, maybe. But I know one thing, data doesn't look all that great. As we go into next week, looking at yields, if yields start to push back higher, this scenario might be where people are too long for yields to go higher. And if yields start to go back higher, that will put a lot of pressure on equities to probably just go lower, kind of maybe in a hurry. So, Alpha Hunters, have a great rest of your weekend and take care.